Get this crystal down, get this crystal down. Shit, that's how you and me, that's how you and me. Cheering, it's the crystal street, the crystal street. And it feels so good, yes, it feels so good. Sharing, all that Christmas love, all that Christmas love. Like you to celebrate, to celebrate. Don't want a lot for Christmas. There is just one thing I need. I don't care about the present. I don't need the Christmas tree. Oh, I just want you for my own. Oh, you could ever know. Make my wish come true.
You guys all been good and practicing real hard. Yeah. Clarence, you done rehearsing real hard. So same thing in new saxophone. Great. Everybody out there been good? Well, it's not me. You guys some trouble out here. And you better watch out. You better Good morning, everybody. Morning, Mr. Kenneth. Good morning, everybody. And happy Friday. Let's see, what do we have going on here? We got a lot going on here. Market conditions right now. Let's just, before I jump into our daily overview here, I want to come back out and look at our equity indexes, just to let you know where we're at. Okay, S&P, we're in a sideways channel. Okay, NASDAQ, and somewhat on the Russell. The Dow is the odd one out. Okay. Good question. How long has it been since you witnessed a high volume trading day? You always hear low. Yeah, that one of the things I check each morning is the volume on the Dow 30 stocks. Okay. And what's interesting is today Nike, okay, which has some news coming out, and I think it's going to be the wink wink nod nod for what we have, the back to school session, sorry, the numbers for the back to schools. Um, and this quarter, I think Nike's already given the signal that retail sales are not so good. Okay. But anyways, if you notice Nike down in the corner and you got that the volume and then up on it's it's got more volume today than NVIDIA, and NVIDIA is generally about anywhere from 1 to 3 million shares in the pre-market. But look at the overall 3M, one of the largest market cap weighted stocks on the Dow, um, Dow Jones and the S&P 500. It's only got 1,400 shares traded. Home Depot, 2,000 shares. Sherman-Williams, 117 shares. Goldman Sachs up $4 almost, and only 3,000 shares traded. So this volume is something that we note every day when we get into the uh, when we start getting into analyzing the markets. Okay, because if you're just watching a ticker tape go across the CNBC or Bloomberg or news channel that you might be watching, you're seeing, wow, Goldman Sachs up $4, Sherman-Williams up $2.80, Caterpillar's up, NVIDIA's up, Microsoft up, American Express up. Wow, that thing, but then look over here. What's the evidence? Yeah, it is up because somebody got a margin call or somebody's getting filled on an order. There's not a lot of buying going on. Now, overall, in the market indexes over the last, gosh, I would say the last 2 months, this volume has been very, very light. Okay. Now, very light volume at market tops is what makes us very, very defensive. Okay. Light volume as the markets are moving up, okay, can signal a negative divergence. Okay. So we watch for double tops and so on and so forth. And you can see over here on the daily chart in the corner down here, we do have a nice double top and we're just coming off it and we're just below the 50-day moving average. This whole last move up was on very, very light volume. Okay. So it's something that we want to note and say, you know what? Most market tops, they got double tops and head and shoulders patterns and other type of reversal patterns. On a daily chart, it takes a little while for them to manifest. But as we pay attention to volume on the indexes and as came back, almost made a new high, um, and then has since traded back below the 50-day moving average. This is a bearish signal. The light volume kind of symbolizes some unexpected volatility as well. So taking that light volume and then also making reference to some of your internals, okay? And I'll bring some of them up over here, okay? Now, I always pay attention to what the trend is doing. Now, the trend is the short-term traders index, Richard Arms, and also known as the Arms Index. Okay. When we have high readings, it implies that the market's dropping, but there's more upticks in up volume. Okay. So somebody's stepping in to stop the downturn. Mostly the NYSE is what the composite is what this represents. So it does show that, hey, some big players are stepping in and buying up the market when the trend is high. When the trend is low and the markets are shooting up, it's also implying that things are being sold as the market gets higher. Okay. So a reading above 1.5 is actually pretty good and indicates that there's upticks and up volume coming in to the NYSE. Okay. Readings above 2, we want to be ready for an opportunity to go long, okay, as price drops into demand. And we also see that the VIX over here, and we got a pre-market VIX, I don't have it up here at the moment, but in the pre-market, the VIX is trading lower, okay? That is also a bullish signal, okay? Now, both of those are bullish signal, but when you combine what the volume is over here, it kind of takes away the validity of how strong that move or potential move may be. Okay. Now, one of the things I wanted to get in, hopefully that answers your question. If not, just let me know, Kenneth. I know it's a little long answer, but sometimes explaining things and showing you where the evidence is really helps you understand what we're doing at this point. Okay. So Thank you for the question. And throughout this session, even on our live tube panel or live stream, okay, for other folks out there, and good morning, everybody. You can ask questions all the time. My team is always monitoring what's going on, and they're letting me know if I have a question or a student has a question and wants to know a little bit more. Okay. Now, this morning, as why am I teaching a little bit? Well, you can see that as we mark the prior sessions high and prior sessions low, we see that price has not broken the higher low on the S&P. It's an inside day. Okay. Inside days can be, well, they have a different trading environment. Often they can be very choppy, especially with the lighter volume. They can have some more price volatility. Okay. So on inside days, we tend to look for zone entries. The opportunities for taking trades tend to be better, more safe, a little bit later in the session. We also expect short-term profit taking until we have price moving above the prior session's high or below the prior session's low. All of these pieces of information that I'm sharing with you help me fine-tune what is the best environment and what type of trading style we should be looking at for this session. Okay. Now, as I was pointing out earlier on our tick-based charts and also on a time-based chart, okay, notice the sideways channels that we've had. The New York session or London and New York session yesterday was pretty volatile, big swings up and down. Okay, a lot of manipulation in the market. The Asian session was kind of quiet, and the London session got a nice little run. So what we're looking for today, as we combine Asian and London session, how do we anticipate what the New York session is going to be like? Okay. So when we combine, like, let's just say, for example, the Asian and London session just have a sideways channel. That would lead us to believe or lead us to understand that the New York session is going to be very volatile, okay, and good trading opportunities. There was let me see if I can grab it here on our Discord room. And if we can post a link in our YouTube channel for people that want to sign up in our Discord. I did post a video yesterday that I want to put in the chat as well. And this lady just summed it up really quick and really easy. So I'm going to copy the link. Team, can you post it in the YouTube channel as well? But she gave a very quick, easy, down and dirty summary of how to use that information. Okay, Asian London session to help us anticipate the New York session. And when you combine the two sessions together, it just shows you what the third session is doing. So we have the oh, okay, thank you, Mr. B. Thanks for posting that there. For the when you combine the two sections together, London or Asian and London, they'll help you understand what the New York session is doing. If you see like sideways consolidation during those times, then the third session in sequence should be more volatile. Okay. So utilizing the overnight markets, just seeing what the sessions are doing can help us plan ahead of time. Now, in the same sentence here, okay, we see that the markets have gone sideways within a range. And we use that range as an indication of how we're going to look for some potential trade opportunities. Utilizing the map here, and this is one of the maps that we have started to work with in understanding the trading environment. Okay. And we have seen that when you have that sideways market, it leads us into the next 3 to 4 swings to the right side of the chart. It's like a storyline, okay, or a map, if you will. That consolidation or the sideways choppy markets tend to be easier to spot. They're not always easy to trade. Okay. Now, some traders are short-term traders and scalpers. They do fantastic in that market environment. I tend to use this market environment to help me prepare for the next couple of swings uh, to the right side of the chart. Yesterday, later in the session, we had a small time frame. Let's just open this up. I want to share this real quick. You can see that the market was going sideways for a period of time. Okay. And that's a picture of accumulation. Now, price breaking to the downside, okay, that's a breakout phase. So you have accumulation phase, breakout phase, and then the spring. Okay. Now, the spring phase is what I tend to do the best. Yeah, and in trading. The breakout phase is a little bit more volatile. Sometimes I get it, sometimes I don't. But what starts this sequence is understanding the price movement up and that basing sideways. Okay. Now, on a larger scale, we have a price movement up and price is basing sideways. So during these market conditions today, as we are watching for the market open, we're going to look for the potential to break out to the upside or to break out to the downside. If we break out to the downside, oh, thank you for posting that. If we break out to the downside, we're going to look for price movement to go long. You have the accumulation phase, the breakout phase, and then we have that spring phase. This is something that we've been utilizing in our trading environment or trading. Oh, look at that. Now we got a nice one on Bitcoin. Oh, watching for these sideways choppy markets and then anticipating the other um, so second. Just want to bring this back into perspective here. And I do have a lot of notes on this chart that have been pretty useful for us. Again, accumulation phase, breakout, spring reversal, and you also see that spring reversal and a move back up or down, if you flip it around, is where we often find that Elliott wave phase. And of course, once you get to the price spring reversal, it tends to go back above the accumulation. In micro Bitcoin, it's been great for trading these as well, since the big banks and institutions are getting much more involved. Accumulation, we had the breakout phase, and then we had some opportunities to splice in for the spring reversal. Okay. And since then, the market has started to do its thing again. Okay. Now we have an accumulation. We're looking for some opportunities to participate in that move back to the upside. Now, all of this teaching and things, what I'm getting down to is the inside day tends to be choppy around the open. Lighter volume tends to bring in that additional volatility. Okay. The size of the Globex range and comparing it to the daily ATR can be another clue. Okay. This is why we mark so many different places. If we're an inside day, very, very often we fill the gap the same trading day. So we have an idea that about 85% of the time, price will come back and fill the gap. Well, where is the gap? Well, you need to know. 5 p.m. close, gap fill. That would mean at this point, and after market open, price would most likely go lower for us to have an opportunity if there's a demand zone around the same area. Okay. But we do anticipate about 85% of the time that price will fill the gap at just after session open. Now, Another notable thing is identifying the Globex high and Globex low. This is the overnight trading session. And sizing up the range, we got 32.5 points. Okay. Look down at the daily chart and say, well, okay, you got the Globex range, and we compare that to the daily ATR. We have some parameters there that if the Globex range is between about 0 and 40% of the daily ATR, we tend to have more of a trending. I call it a narrow range. And if the Globex range compared to the daily ATR is between about 40 and 70%, it's kind of in the middle, very choppy open. Okay. Right now we're anticipating more choppy open. If the Globex range compared to the daily ATR is greater than 70%, we look for the bull trap and the bear trap. So each piece of information that we're gathering right now and what I'm explaining here is we really don't have a good trading opportunity on the equity indexes at this moment. We have some good understanding that things could be choppy, volume is light, inside day, high potential for the gap fill the same trading day, and price is not in a supply zone or not in a demand zone. It's just kind of going sideways. Okay. So all those things stacked together allow us a good understanding that, oh, okay, I can relax. Okay, I can look at something else to trade that may give me a higher probability trading environment, okay, or trading opportunity. Other notable things here is that S&P is right at that 50-day moving average. Okay, the daily chart in the 50 moving average also represents bullish and bearish. Above the 50 moving average, markets tend to be more bullish. Below, they tend to be more bearish. When we're right at it, there's a decision. Okay, markets are making a choice. Okay. Again, all of these things are leading up to, it's not an opportunity to jump in and try to make a short-term trade right now. It's kind of watching and putting the information together. Okay. So volume still remains pretty light. We're about 10, 12 minutes away from market open. Nike is dropping. It's been down as much as $7. Let's take a quick look at where Nike dropped down to. NKE. And what we would expect, yeah, this is all, well, hold on a second. Yeah, this one's been set up for a while. Okay. So we had accumulation, we had the spring, we had the sign of weakness, and now we came back up to the selling point, and we're looking for a gap down 59.26. Yeah, we're already back down. So this map is playing out. Okay. So looking for that selling point. Now we have let's come back to the chart. And using the map, we can see that spring, we had the sideways channel, we had the spring, which was to the upside, the sign of weakness, which was this downtrend, and then price bounced back up to the selling point, and now we're looking at the mark down with a gap. These happen very, very often in the same sequence, okay? And what this does is it allows us to kind of map out the probabilities, okay? The accumulation starts the whole sequence, okay? So as we do see the Nike gapping down, we're about 59. Let's see, it's been lower than that. It's been about 58. Yeah, we want to look down and left. And we want to see if it's gapping into a leg base group candles, which it is. There's nothing really random in these markets. You know, it's price drops where the buyers are or rallies to where the sellers are. And the banks and institutions create these charts. Okay. Some news around the Japanese yen. Let's jump back into trading. We got to get some things lined up. Japanese yen has some news about interest rates. I believe they're going to raise a quarter, which should be bullish for the yen. Okay, so we're keeping a close eye on the Japanese yen for price to come down to potentially demand area, and then we'll look for the move back up. Okay. All right. And let's come back to our S&P. Okay. Nothing really to set up at the moment. Dropping down to a small time frame. Yeah, we're just inside of that channel. Okay. And for the NQ, also sideways channel, and also take a note that the NQ is right back up at resistance. Now, I believe the NQ is an inside day as well. Check. Okay. We do have a supply zone just above the prior session's high, above the Globex high, so we might be looking at price doing a little breakout to the upside in the next 8 minutes, right into some sellers. Okay, we'll look for price to come back down. Okay. NASDAQ is below the 50-day moving average. This is a bearish signal. Okay. We do see that the 220 moving average is crossing above the 50. That's somewhat bullish. Okay. But overall perspective here is that we are still looking, as we start off as an inside day, we're still looking for that gap fill. Okay. And these are statistics that we've backed up for many years now, is getting a good understanding of what conditions does that gap fill most often. And basically, if price is opening up inside the prior session's range, very often the gap fills the same trading day. Now, we have the Globex range, which is about 100 and let's call it 190 points. Okay. NASDAQ Globex range, 190 points. The daily ATR is 365. Okay. So we're not quite to where the bull trap and the bear trap is at. Not quite. Okay. But we could be leaning that direction. Now, leaning that direction, we may see a pop to the upside. Okay. On the NQ, let's just double check a couple things here. We got Apple, Broadcom's up a buck, Nvidia's up, Meta's up, Tesla's up, Amazon's up, and Microsoft. Okay, so the large market cap weighted stocks are indicating a little more bullish, but we've also noted that the volume is very, very light. Okay, so the opportunity for the bull trap on the NQ, we'll look for a little confirmation as it turns back out of that area. Let's see, that for some reason is not upload. Oh, there we go. Hi, Kingani. Let's see. They are simple moving averages. Okay. We keep it simple. I know I'm giving you a lot of information, but the information I'm sharing with you is to help you understand the trading environment as we're getting into it. Okay. There is no, I don't think we have any giveaways for today. Okay. There's been some changes going on with the Elite Trader Funding. They're revamping a few things, getting ready for their big sales, I guess. Okay, let's see. So potential, if we get a breakout to the upside on the NQ, we're going to look for that opportunity for price to come back and fill the gap. And we do have that high probability that the gap will fill the same day. So note where the gap fill is at and the potential price movement back down to fill that gap since we're opening up as an inside day. Okay. Something else that's notable, we posted that in there, is the exchange traded funds yesterday all had a breakaway gap. Okay. The Dow tends to still be on more on the bearish side along with IWM. We're seeing mixed markets between the SPY and the Qs this morning, probably mostly because of Nike trading lower. Okay. All right, got that. And let's see a couple of anything. All right, let me come back here. Dow. Also, Dow is an outside day, but we still have a little less chance of filling the gap, but often it does fill a gap if we've traded outside the range, but opening inside. Okay. If we have not broken the prior session's high and low, then we have a very high probability of filling that gap. Okay. Keep an eye on the prep screen zones. Other things to keep in mind is that today is the last trade date for financial futures. Okay. That includes the FX markets and the equity indexes. So should all be traded in the March contract on each one of those financial futures products. Okay. So we do see some of that volatility around that contract expiration, quadruple witching, where we have options expiring as well. Most of our trading activity we're going to look for is going to be in this morning session. Okay, unless there's some news or political announcements that come out that kind of stir up the markets. Russell is also an inside day. Okay, daily ATR on the Russell is 40 points. We're trading at 16 or 17 there, so we're about 30%. So we should expect a bigger move on the Russell. The Globex range is what we classify as narrow compared to the daily ATR. And when we have that narrow Globex range, we often see a bigger trend. We just have to wait for the entry, and then we have a pretty good price move. Smaller time frames, we're still looking for that gap fill, but we do have a leg base right at the bottom here. Okay, and you can also see that there is a pretty good resistance area. Now I'm explaining a lot of these things so that we don't get on the wrong side of the trade, and we help manage expectations of how the market potentially can, well, as they get underway and starting trading. Crude oil, let's see, make an adjustment for the Globex high. Crude oil, the oil inventory report showed a big shortage or an outflow. Okay, it's pretty sizable. So we are still looking more on the bullish side of crude oil. And we've just seen it come right into a fair value gap area. And this is going to be my first trade that I'm going to take. I'm going to take as price is still coming in here. I'm going to start off with a couple of micros, just 5 micros on this. I'm going to come in at the market. And I'm going to put my stop loss right at 56.19. It's always important to help when you place a trade is understanding what risk you have on the trade and really point out that dollar amount. Okay. So I took this a little bit later. I am anticipating price to move higher. And for that, I need a supply zone. So let's go right above that Globex high. And kind of set our short-term target. And let's get above this. Okay, so we got 2 price targets that we're looking for on crude oil. Target 1, 56.74. Target 2, 57.14. Stop loss, 56.19. Okay. All right, nat gas. Nat gas is building a nice accumulation, what we call as a buy territory. Okay. And right at the start of the buy territory, as price started moving back up to resistance, we have a fair value gap about 3.906. Okay. So as price comes up, we have a potential breakout trade. Okay. If we get price coming back down to 3.09 or 3.906, we can look for an opportunity to take the trade long at this point. Okay. Gold also building a nice accumulation. Potential breakout about 43.70. That doesn't mean jump in the trade now. Okay. Give this thing a little bit of room to open up. We have been seeing a lot of manipulation around gold, silver, and some of the other big products like that. So the manipulation can leave a mark. I mean, during this phase, we have to anticipate that, we do have a very good protective stop loss and a place we can have a good place to take a profit. Okay, so we're waiting on that. S&P, let's come back. Okay, S&P is breaking to the upside out of this range. And we still have that little buffer right up there where price came down yesterday. Okay, so. And just to keep you, when price comes back into what we call as a dead space, this accumulation area, all this area is showing us that there have been filled orders. So if all the orders have been filled in this range, then we can expect price to go through it very swiftly. Okay, so no long or short entries inside that dead space. It just, you get whipsawed out too quickly. Now let's see what all the indexes are doing together. Now, the first move out of this accumulation area often goes right into a leg base group of candles. Okay. So I'm going to look up and to the left and look for that leg base. It looks like we have one right there. Again, that kind of, we are expecting a little bit of a bull trap. You can see that the Russell is still consolidating as well. Let's get back over to the NQ. I think we might have a trade set up on that one soon. What we're looking for is a little bit of weakness right up here. We want to see some signal that the NQ looks to pull back. Yeah, you don't want to just hit it right away. Okay. On the tick Q, we're not seeing that there was a buy program or a sell program. It's opening up kind of quiet, that light volume that we anticipated. But we did open up inside the prior session's range. Therefore, we are still expecting the gap to fill. That means price coming back down. Right now, we're looking for where we might have that opportunity to splice into that. And for that, we'll look for that a fair value gap to give us a little more of that confirmation to take the trade back down to the gap fill. Crude oil is working out good for us. Ooh, Russell went right up there. Gonna hit the Russell. Stop loss 25.49. Just keeping it small right now, okay? We're expecting a gap fill. So the risk is small compared to the potential profit target. Okay. And I am sticking with just a couple of micros on this. This trading environment can be a little shaky. And I don't need to take a lot of unnecessary risk. Okay. What do we got going on the Dow? The Dow has just hit the fair value gap. 48.26 or 48.624. NASDAQ. Still waiting for a little confirmation on the NQ. S&P. Price did come right up to that leg base. Didn't have a chance to get into that one yet. But if we're looking for where the buyers are, they're going to be below this accumulation area. Okay. All right, so what do we have right now? We have Russell short, S&P short, Dow short, and crude oil long. And let's see what else we have on the block. Let's see. Dollar must be pulling back. Yeah, this is another market condition that we can look at. Notice the dollar is dropping on this hourly chart, but we're seeing the 10-year and the 2-year moving up. Now, what that's going to tell you is that overall, these conditions are going to be a little more choppy, a little bit more whipsaw. Okay, they're not the best environment. When the dollar and the yields are going the same direction, it's a more favorable trading environment. When they're going inverse, we have to be a little more defensive. Now looks like micro Bitcoin's coming right back down. All right, let's get over that one. Did I already have it? No, I didn't have it set up. Mark coming right back to a fair value gap. Micro Bitcoin. Since we're starting off with an inside day on a lot of these indexes as well, we have to be prepared to take some short-term profits. Okay. This is not the trading environment where the trend is at. That is in a different place on the map. Okay. So I'm going to look to take a trade on micro Bitcoin. And I'm going to place that order out there about the 87.575. Just keep it to a small amount. 575. Then my stop loss will be about 86.766. I'll put that on once we get filled. Okay, everything's in the way. So we're watching for micro Bitcoin 87.575. Stop loss 86.752. Now you can wait for price to come into the range and start to turn out. Okay. What we want to help you see is that we forecast these turning points. based on the picture on the price chart. We execute the trades either using a leg-based group of candles, or we use a fair value gap if the momentum or the trend has already been established. And these markets are quiet right now. Now, throughout this session, you guys can ask questions as much as you like. Okay, I'm happy to explain things, as you can see. And if you need me to slow down on a couple of the trade setups and entries, I'm happy to do that as well. Okay. All right, natural gas coming back to the fair value gap area. Here we go. Crude oil's making us look good. First target 56.74. Glad to see everybody in our YouTube channel today and in our live trading room. Good to see everybody. Right now, we're just kind of hanging out, waiting for things to manifest. But we did have a good explanation of what's going on in the marketplace and why we're keeping our position size small. We understood the trading environment was going to be a little more choppy, a little more risky. Okay. Inside days often start off this way. Dow's doing pretty good. Still looking for that potential to the gap fill on the Dow. NQ to the moon. That's what we're waiting for. I'm going to get this trade set up. Notice where the 50 simple moving average is on the daily chart for the NQ. And price is poking at it right now. And let's see. Order filled. I'm going to turn off the video for right now, free up some of my resources. And I am going to place a trade on the NQ to sell short right around this 25,600. You can see the prices. Now my charts are updating here. That's just poking its head right above the 50-day moving average. Okay. So it's come in. I'm going to start off with just a couple of micros. If we're going to get that, if we're going to target that gap fill, we have enough potential profit to start off with just a small size, like 2 micros. Okay. 25,596. I'm going to start off there. Looking looking for a short opportunity. Once filled, I'll place my stop around that 26,635. S&P has popped through that area. And we have not made it through the whole dead space yet. Yeah, we're looking for 619. Oh, look at that. Russell stopped me. I'm gonna come back in at that. What time is it? Quarter hour? Yeah. 25:49. Still looking for that gap fill. Now gas just came down and hit the fair value gap. I'm gonna give this one just a little bit more time. If you notice, the Globex range is at 11, almost 12 cents, and you can see that we're about 27 cents on the daily ATR. So I'm not really excited and pushing to get into nat gas really quick because the Globex range compared to the daily ATR is about around that mid range, and it often is a little more choppy. Between 40 and 70%, you can get a lot of ups and downs while waiting for that to set up. Okay, well, the NQ is breaking out to the upside, okay? Now, when we look at the overall map and we have that consolidation like we did right here, and I'm going to break to the upside, okay? That's often we're going to be looking for that opportunity for price to come back down. Now, we are expecting that gap fill, okay? But I'm going to be looking for the opportunity to take a trade short as this starts to set up. Now, profit target is going to be on the other side of this accumulation area. Okay. So just utilizing the map, we had a breakout to the upside. Therefore, we're looking for the spring reversal to go to the downside. Okay. So our Dow trade's working out pretty good. We're still looking for the gap fill. Russell, we got back into, we're looking pretty good. We've got a little greater than 1-to-1 so far. We are looking for that gap fill. Hey, good morning, Genji. I think Santa comes next week, right? According to Stock Trader's Almanac, it comes a little closer to the actual date than, people think it's a whole month that Santa's going to come, but generally it's a little closer to the 25th. All right, so we still have some profitable trades going on. S&P is going against us a little bit. Gold just chopping sideways. And our exchange traded funds, the Qs have gotten, the Qs may have legs. Okay. Notice the different types of gap. We had a breakaway gap and then price consolidated sideways. This is what is referred to as a measuring gap or a runaway gap. Okay. So when you understand the different types of gaps, especially when it comes to like these stock ETFs, we may have some more upside on the NQ. So careful, we are expecting a gap fill, but careful of trying to expect that too soon in the game. Breakaway, measuring, and then exhaustion. Those are the three types of gaps on the bigger time frames you want to watch for. Now, the runaway gap or measuring gap is also referring to that you take the distance of where price broke away to the beginning of that move, and that accounts for 40% of the estimated move. The other 60% is to the upside. Okay. Actually, that's not right. It needs to be 260. So the way you calculate that is you recognize the breakaway, you have the measuring, okay? And then from the gap to the gap, okay, just before the gap, this accounts for 40% of the estimated move. The other 60% is to the upside. So we are looking for cues ultimately to get back up to that 630 area. May not happen today, okay? We do see the SPY, it got a breakaway gap and now price is consolidating sideways. We'll look for on Monday a gap to the upside for that measuring gap to get that same type of momentum. And that goes along with the IWM as well. Okay. We got a nice little pop on out of the fair value gap area. Okay, dollar stabilizing, and we're also noticing that the trend is getting low. Okay, notice the cumulative tick for the NYSE is really flat. There's no buy program and no sell program. It's just kind of equal number of upticks over downticks. Okay. On the tick Q, we're on the top side, showing there's a little more buying activity than, or more up, let me say it correctly. On the tick Q, which is a NASDAQ composite, it's showing that there's more upticks than downticks, and we're on the positive side of that. Okay. But we haven't gone into a buy program, which are at these extreme, or a sell program where we have those extreme levels. Okay. But a little more bullishness on the tick Q, more upticks over downticks, implies that the NASDAQ may continue to move a little bit higher. Okay. Back out to the chart. We need it to move up a little bit higher. We have an order waiting for this potential gap fill. The risk on the trade as we are approaching this area, okay, and we're 6 minutes away from consumer sentiment. Now, consumer sentiment is going to be based on last month numbers, okay? So these economic reports that come out are not on what's happening right now, they're what's happening or what happened already, and now they're reporting it. So in a perfect world, in about 5-6 minutes, the market will pop to the upside, give us our entry, and then we'll start to see the high potential of our gap fill. See, the big banks and institutions get these numbers ahead of time. They have their own way of collecting the same information, okay? So they already know what these numbers are. These are last month's numbers, so they've been available for quite some time. Okay, it's just when the public gets these numbers, we see that there is a reaction. Okay, and for the reaction of this, we're looking for price to pop up 25,596 area, stop loss 25,635. So we have a difference of about 40 points. Okay, now let's assess the risk. If we choose to set this trade up ahead of time, we're looking at 40 points risk per contract. Okay, that's going to be $200 a contract on a mini, and it's going to be what's 40 points times 2? Yeah, it'd be about $40 on 40. It'd be about, all right, I'm getting myself confused. Hold on, let's do the calculator thing. So on the micro, we got 40 points worth of risk, okay? And that's going to be about $2 a contract. So we got $80 per micro contract risk, okay? Now, based on my trading plan, I generally allocate about $300 risk per trading idea, okay? My initial entry is going to be about 50% of that so that I can add on if necessary and maybe even cost average, but I'm really not into the cost averaging, okay? So if my maximum risk potential or my trade idea is $300 max risk on that trade idea, and I'm willing to put up 50% of that on the initial entry, that's going to be about $150. So I'm a little over if I use two micros, about $10 over. Now you might have a little buffer, but you should always position size based on where it really wouldn't ruin your day. It wouldn't change your trading plan. Okay. So the trade we have set up right now is for two micros. Yeah, we got two, and we've got that set up. So I already know my max risk is going to be about $160. Okay, at the start. Now we're just waiting. We've got about 2 more minutes before the economic report comes out. Consumer sentiment. Consumer sentiment last month was not the greatest. Okay. Just remember, how did you feel last month around this time? Did you feel really bullish, like the market was taking off, or did you feel that the market was getting topping out? Okay. You got the daily chart up here. All you have to do is look back about 20, 30 days and say, yeah, the market was kind of pushing up here, but we were in this upper range. Okay. So the sentiment might have been, when they take that survey, the sentiment might have been a little bit more on the bearish side. It's okay to speculate on that. We'll see the evidence here in just a moment. Taking heat on the Russ, on the S&P, taking heat on a little bit of us, okay, just as we come up to that consumer sentiment report. All right. So I know my max risk is about $160 for two micro contracts. That fits within my trading plan. Every trader should have a risk assessment for their trading plan. What's your max risk per trade? Okay. Don't utilize the full max risk on every trade. Start off with half of it. Okay. There's always going to be opportunity. If your trade idea is right, you're going to be able to add on and be able to participate. It looks like we did get a fill, but I think my data's slowed up a little bit, lagged. There we go. Did we find enough sellers here? Found a few. Now we're still expecting that gap fill, so that's going to be my main target down here. And that number, the gap fill is right about 25,221. Now, my first level as we're watching this is I'm also recognizing that we still got about 18 minutes to finish that candle, but we do have a fair value gap down around this range. And that fair value gap is going to be one of the first potential target areas that we're looking for. And that's going to be roughly, if we're going to continue to go long, this is where we would want to go long. and that's at 25,423. The small time frame traders are going to be waiting for a signal, and that's going to be utilizing their fair value gaps on a smaller time frame. And we do have a nice steep slope up. We do have a fair value gap in this area, so we need to create one to the downside. And that's what they potentially are waiting for at this time. Yeah, crude oil's being quiet. All right, gold. Let's drop down to a 5-minute chart. Yeah, we got a nice pocket of points. Notice how fast it fell over here. It should go back up the same way. We're just looking. I don't have any place I would be looking for a long yet, not even on a 5-minute chart. Nice. Oh, got stopped at a Russell twice. Dow's still working. We are in the NQ trade. S&P. Taking a lot of heat on this one. And look at the cumulative tick over here for the NYSE. There's really no buyers and no sellers. That's a tough one to trade. I mean, upticks and downticks are equal. All right, looking good on the NQ. Notice the daily chart price just poked right above the 50-day moving average. That was some of the evidence that we were looking at. Is how price would interact with the 50-day moving average. Simple. And our first target, 25,423. Now, at any time along the way, you can take a profit at 1-to-1, 2-to-1. You take a profit just when it feels good. Okay. But have a plan. If you intend to stay a little bit and let it work, have a plan where you're going to get out. But once you feel those butterflies and that tickle in your tummy, and it's like, yes, that's when you want to take a profit. Reward yourself. Anybody get in on the NQ? What was our max risk? $160. Okay, so we're about 1-to-1 right now. We started off as an inside day. Inside days, the gap fill often the same trading day. This is why we were looking for the short, even though the market was short term in an uptrend, making higher lows and higher highs. Okay. Keep an eye on the tick Q. We're starting to see some down ticks. We want to see it get down here where we start seeing more down ticks than upticks and see that extreme. And some of those things I'm mentioning are just going to be odds enhancers. Okay. Just saying, hey, I'm in it. Do I need to get out now? Do I need to get out now? We don't even have the public or the short-term traders have not even stepped in yet. Okay. So on a 5 minute, maybe even 3 minute chart, they're still looking for a fair value gap to the downside. So that would be that whatever happens here would take out this box, which I have marked as a fair value gap area. So when it takes out one and creates one, that's when you'll start to see the public start to jump in. Those are some really good techniques, and there's some really good instructors out there teaching the candle range theory, also the uh, fair value gap, but you got to know how to use that information. Okay. You know, when do we use a leg base as a zone entry? When do we use the fair value gap as an entry to go short or long as far as using it in momentum? What information do we collect ahead of time before we execute on the trade? Okay. See, the public out there and many of the trading prop firms and stuff out there are waiting for some confirmation. And once they take out that first fair value gap area, they'll get some of their confirmation. And their heads will start turning more to look for a short opportunity. Okay. So let's see if there's any other support on this. So come out to another workspace here. In order for the Qs to go down, in order for the NQ to continue to go lower, we're going to need see some weakness on the QQQs. Okay. We're also looking at the stocks that make this up. So let's get everything in perspective. And Nvidia looks good. Apple looks good. Moving to the downside, Meta. Yeah, we're not getting a lot of the stocks selling off yet. In fact, Google's going higher. See, the way this works is the futures are what we call as a derivative instrument. They derive their price from something else. The Globex is a computer. Okay, it's the acronym for the computer network. So Globex computer adjusts price up or down on the futures product based on what the underlying large market cap stocks are doing and the Qs. Stocks move first, Qs move second, futures get adjusted based off of their behavior. Futures follow, they never lead. Okay. That's why they call it a derivative. Okay. And these are all good things to know because if you're in a trade like we are right now, I want to find something, you know, if are we still on the right side of this? Should I get out now? Should I take my profit? Okay. Well, the NASDAQ um, futures, okay, the index is a market cap weighted index. The large market cap stocks move the index more than the smaller market cap. So in monitoring all the largest or 8 of the largest market cap weighted stocks, if they're all going down, then futures will go down. Well, stocks first, exchange traded funds second, and then futures will follow. Because we're at a pretty sensitive spot right now. We're up a couple $100. We want to, we're feeling pretty good about the trade. The entry was great. Okay. But do we need to take that profit now? And these are some of the things we need to explore. If futures follow, what do they follow? So we've taken a snapshot of all the large market cap weighted stocks. I think that one's wrong. There we go. And we need to see the large market cap stocks selling off, okay, pulling down. If these are starting to go down, then the cues will start to pull back a little bit. Okay. And if those things are happening, then we have the futures to adjust for that. Okay. And boy, they're just not giving us a whole lot of good signals yet at all. Gold got the breakout, and now we have a fair value gap on a 5-minute chart. I'll keep the contract size small. I'm going to use this level right here as protective stop loss. And I'm going to look for an entry roughly about that 43.69. I'm going to start off with 2 micros. Then I'll place my protective stop at 43.54. Nothing going on with crude. Dow's doing all right. Come on in Q, give it up, give it up. Bitcoin's getting a breakout. Oh, look at that. Dang it. Look at that. Came right to it. You're not going to catch everything, but I should have set that one up. Beautiful entry. 87575. We called it, just didn't execute on the trade. Bummer. Japanese yen is approaching demand. All right, Meta's helping. Come on, Google. Need the stocks to tip over. Now we started this with just 2 micros. We have $160 risk on the trade. Prices moved away greater than 1-to-1. You can take half that risk off, or you can take all of that risk off and move your stop to a break even. Okay. What is your plan? Okay. We need to see some more down ticks come into play. The stocks right now, or the NASDAQ composite is showing more upticks over downticks. And it's coming into a buy program. So we're going to start to see the futures get a little jumpy here. You decide if you want to adjust your stop, decide if you want to take the profit, or if you're going to let the $160 risk play out.
Order filled.
That stopped out on the Dow. Come on in Q. I really want to see that tick get below zero. How's everybody doing out there? You guys were all real quiet today. Not a lot of questions. Come on in Q, make us look good. Yeah, one of the things I'm really watching over here is just to see that the cumulative tick, I would love to see it get below zero. All right, question. So what would it mean if stocks gapped up or down overnight? We can expect the futures to move in that direction overnight before the market opens, create the gap at the open. Yeah, see, when we're looking at, well, stocks don't, not yet, trade overnight. But in the pre-market, if we see the stocks gapping up, we know that that's going to impact the futures. Okay. Because futures follow the cash market. A really good example of this is on the S&P. Okay. And on the S&P, I use the Dow 30 as an odds enhancer. Okay. So for all the Dow stocks that are greater than 94 cents positive and greater than 94 cents negative, we net the result. So we have 1, 2, 3, 4 negative, and we have 13 that are positive. That leaves us with 9. So you take that 9 and you multiply it by 2. That gives us a value of 18. That tells us that the cash market equals 18 and the S&P futures are trading at 46. S&P futures are overbought relative to the cash market. Since futures follow the cash, then we have to be leaning more to the downside that futures and cash will balance out. In order for stocks to catch up to where the futures are at, they would have to make some monster moves to the upside. All of our negative Dow stocks would have to go positive. Okay. The Dow Jones 30 is a price weighted index, whereas the NASDAQ, S&P, and the Russell are market capitalization weighted indexes. Okay. So this is a way that we can see that if futures are trading at a premium or futures are trading at a discount. Now, futures trading at a discount means they're below the cash value where we're looking for an opportunity to be a buyer. Futures trading above the cash value at a premium, we're looking for supply zones where futures, where we could look for a short opportunity. At the moment, we're about 30 points overbought. S&P futures overbought relative to the cash market. Now, the futures often balance out with cash, generally in the first hour to hour and a half of the pre-market session open, when the banks and institutions are most active. Okay. If they don't balance out in the first part of the morning session, they often balance out in the last hour. We utilize this for trading opportunities where if futures are overbought going into a supply zone, or if futures are oversold going into a demand zone, we look to connect both of those to give us that potential trading opportunity. We use the fair value gap, the leg-based group of candles as a way to gauge the risk and properly size our position to stay in the trade. Okay. Other information that we've shared today is we opened up inside the prior day's trading range. We haven't documented and understanding that most of the time the gaps fill the same trading day. So we have a 85% chance that price is going to come back and fill the gap. So stacking the odds in my favor, futures are overbought. They just hit a supply zone or a fair value gap area, and we're expecting the gap fill to the downside. I need now to find a way to get into that trade. Okay, so we can drop down to the smaller time frame, and you can even see right now that the public, or let's not call it public, there are some advanced traders out there that utilize the fair value gap, and a lot of prop firms, and also using candle range theory and things like that. There are some very, very good trading concepts that they use. Okay. But if we understand how they are looking at the market using 5 or 10 or 3-minute type charts, we can see that they're not even interested in jumping in yet because they weren't looking at what we were looking at. But soon, if price takes out this fair value gap and creates another one to the downside, then they will start to jump on. We're also seeing, what other traders would be using as a protective stop loss. Okay. The 94 cents comes into play, and that's a great question. Okay. Is when I gave the engineers in the classroom, I said, yeah, it's a plus or minus $1. Well, then they were like, well, how much above or below $1? Well, when I gave them 94 cents, they didn't question it. Now, I've been utilizing that for probably the last 8 to 10 years using the Dow 30 stocks. Okay, so a lot of this is just my experience. There are other ways to calculate cash market versus futures. Okay, but I found this one since the Dow is a price weighted index. I started measuring every stock that was greater than 94 cents or greater than $1, okay, or less than $1, and I started netting the results. And I saw that very often the futures price would balance out with cash, okay? And it would do it in the first hour, hour and a half, um, and or the last hour of the session. There are some additional studies that you could use as far as estimating how big was the gap on the S&P at the open. Okay. When you start taking those measurements of how big the gap was, and then you start watching and documenting how long did it take to fill the gap. Okay. And this is some numbers from back a ways, okay, a few years ago. The market conditions have changed, so the numbers have also changed. That's why you monitor it and document it over and over again. Is that, let's just say if the S&P gaps up 1 to 3 points, and this is an example only, 1 to 3 points, we look for that gap to fill right as the market opens, okay, first 15 minutes. 3 to 7 points, it would fill in the first hour and a half. 7 to 12, we would look for the gap to fill in the last hour of the trading session. And greater than 12 points gap up or down, we wouldn't expect the gap to fill the same trading day. And very often when we see that big gap, okay, it's usually an outside day. Okay, so you could bring the inside day, outside day into play. Okay. Now you're starting to see that on the 5-minute chart, there's getting some momentum, and we have a very small fair value gap that's being presented, but we haven't taken out the other one here. Okay. So once we take out one and create one, then we have seen that a lot of the market participants, especially in prop firms, ICT trading concepts and things like that, which are excellent courses and classes to get involved with, you start to see when they start activating their trades. Okay. Now, we entered right there at 596. Okay. We had a fair value gap. We had information over on the left-hand side of the chart. Okay. This was the information that we used, the origin of a strong move down. We had a fair value gap. Okay. So the information was on the left-hand side of the chart to show us where the banks and institutions were in. We had a $160 risk on this trade when we took that entry. Okay. We're still looking at that first target, potentially right there, about 45, 423. Boy, that's almost a couple 100-point move, right? 2 micros we're in. Okay. So what is your goal to get out? Do you want to get 2 to 1s, 3 to 1s, 5 to 1s? Okay. The direction that we were looking at is potentially getting the gap fill. Okay. The 50-day moving average was playing a part as far as our entry and how price generally responds right around that 50 moving average. Now we're still looking to see more downticks than upticks, but the tick Q is not giving us, there's an all-out sell program going on. It's just basically going back and forth. Okay. As traders are waiting for the opportunity, let's come back out here on a small time frame. Okay. We still got about 1 minute and 20 seconds for that fair value gap to complete. And that's a pretty small one. The next fair value gap down below. Got about 1 minute left on that. Oh, thank you for that. Yeah, I really appreciate when you guys ask the questions out there, because once you know it, then you can document it. And once you document it, then you can see if it fits within your perspective, your trading plan. Okay. But there are so many instructors out there right now that just go through trades and show you, here, get in this, get in that. Did you make money? Did you lose money? And it gets you all wound up, emotional, because you don't know what they were actually looking at. I like to teach and share that because I was one of those traders that would, I remember the first time I saw that MACD crossover. Oh my God, that was the holy grail until I started trading it. Then it didn't work. No, and then they gave me all these excuses why it didn't work. Okay. Oh, well, yeah, you see here and this and that. And I said, well, you didn't tell me all those things. Okay. Sometimes the desire to make a trade outweighs the desire to get the evidence of why the trade works and why we should be thinking that way. So great questions, and I appreciate the questions. All right, so how are we looking on our... One thing to keep in mind is that if price starts getting back into the dead space area, okay, the price should easily move through that. So as we on the NQ are still looking for the gap fill, which is down at 25,236 where I have my cursor, okay, I expect price to accelerate to the downside once we get past the 411, that old resistance, okay. But 78% of the time, the market will bounce off of an old resistance becomes new support. So 3 out of 4 times we'll get a bounce around that area, okay. If you're prepared to sit through the bounce, fantastic. If you're not, and you've satisfied with your profit, then look to take a profit and wait for the next setup going into that dead space, okay? Boy, the Russell's just right in that channel, isn't it? The accumulation areas are some of the most difficult trading environments for me, my style of trading. Okay. Oh, wow, our session has come to a close here. All right, so it was a good session. I'm glad everybody was here, able to share some of that. We did have a couple of successful trades, but I've got to wrap up now. We have Mastering the Charts recap and review, which will be a little bit, well, in about an hour. Okay, where we can continue with some of the trades that we are in right now and watching them. Let's check our crude oil. Yep, crude just bouncing back and forth. Oh, we got our gold entry. And we're good to go. So we've had some successful trades today, and appreciate everybody for coming in. We'll see you next week. We won't be around. It'll be Christmas break, and markets will be closed. Okay. So everybody have a wonderful holidays. Look at our holiday schedule on our Discord room because we will be doing some more community trading rooms where we have open mic and everybody can share their screen so that we can do some hands-on lessons. Okay, so if you guys want to participate in that, let us know. And we'll see you for our community rooms over the holidays. Have a great rest of the day and happy Friday, everybody. We'll see you in Mastering the Charts recap and review in just about an hour's time. Okay, bye now.